Wall Street once called Bitcoin a fraud, but now they are making billions off it. So what changed? Why are the biggest banks diving headfirst into crypto? Stick around because this could reshape the entire financial world and your portfolio. Hi everybody, welcome again to Enter Crypto with me, Chris Kenyon. Now, in today's video, we're going to be diving into a massive shift in behavior on Wall Street. I'm talking about investment banks. These are the gatekeepers of traditional finance, and recently they have been cozying up to crypto. From calling Bitcoin a fraud to underwriting billion-dollar deals, the transformation is remarkable. So what changed? Let's break it down. Not too long ago, Bitcoin and Wall Street were like oil and water. Remember JPMorgan's Jamie Dimon calling Bitcoin a fraud? Yeah, well, those were the days. Fast forward to 2024, and banks like Barclays, Citigroup, and even JPMorgan are knee-deep in crypto-related capital raising. This year alone, over $13 billion worth of crypto-related convertible bonds have been issued, and you know what that means: fees. Because at least $200 million in fees have been taken for the banks, so it's no wonder that they are starting to warm up to crypto. So what's actually behind this change of heart? Well, it's a couple of things. So first, the SEC's approval of Bitcoin ETFs in January of 2024 was a game changer. It brought a layer of legitimacy to crypto investments that Wall Street just simply could not ignore going forward. And then secondly, you had Donald Trump's return to the White House. This signaled a potential shift to a more crypto-friendly regulatory environment. Compare that to the frosty reception that crypto had under Gary Gensler, and you can see why banks are feeling bolder. So let's talk names. Barclays and Citigroup have led multiple bond offerings for MicroStrategy, which is a company synonymous with Bitcoin investing. I'm sure you've all heard of MicroStrategy. You've also got Goldman Sachs, who have raised capital for Applied Digital, which provides data centers for Bitcoin miners. And then you've got JPMorgan, because they are underwriting convertible bonds for mining giants like Core Scientific and MONERO. And why are banks willing to take the plunge? Well, it all comes down to weighing risk, reward, and reputation. The risk, of course, is that crypto is still seen as a speculative, volatile asset. Legal teams are on edge, wondering what if this all blows up, and nobody wants to be the next negative headline. But the rewards, well, they are potentially massive. Take MicroStrategy's $21 billion equity offering. It's paying banks 2% in fees, and for context, that's hundreds of millions of dollars in potential revenue. So when the fee pool is that big, reputational concerns suddenly seem negotiable. Now, this isn't the first time that Wall Street has wrestled with edgy sectors. If you remember the SPAC craze of 2019 to 2021, banks dove in sort of head first, and then they had to retreat when reputational concerns popped up. Or what about cannabis companies, perfectly legal, but they were shunned by big name banks because of optics, basically. And crypto is walking that same tightrope, but it seems like the tide is turning, and it looks like it's turning fast. There is also a herd mentality at play. Once a few banks dip their toes in, the others are going to feel the pressure to follow, and nobody wants to miss out on market share or have to explain to their bosses why they didn't hit their revenue targets. So it's much safer to move as a pack, and if something goes wrong, you're not the kind of lone scapegoat as well. So, let's be honest, no banker likes being at the bottom of the league tables. So what does this mean for the crypto world? Well, it's another step towards mainstream acceptance. When big banks start underwriting billion-dollar deals, It signals that crypto is no longer just this fringe investment. But there is a flip side. The more that crypto integrates with traditional finance, the more it can be shaped or even constrained by Wall Street's rules and reputation concerns. And so here's the bottom line. Wall Street's embrace of crypto is not a love story. It's a business decision. It's about balancing risk, reward, and as I've said before, reputation in a way that makes financial sense. And for us in the crypto space, this could be a double-edged sword. More legitimacy and access, yes, but also more oversight and influence from the traditional finance world. What do you think? Are these developments good for crypto, or is Wall Street kind of diluting the spirit of decentralization? Let me know in the comments below. Don't forget to smash that like button, subscribe to the channel, and share this video with your fellow crypto enthusiasts. So until next time, stay curious, stay invested, and I'll see you all soon.